Hey guys, happy Tuesday. Thank you so much for joining us again. I'm Jen, your host of Blockchain Banter. Welcome back to Trading Crypto. We've got a lot going on. I know we've been talking about rate cuts and ETFs and things, and we may very well be revisiting that with some expected, unexpected news, depending on how it goes and what position you're taking on this. But Keith Allen is here with me. He is the co-founder of Material Indicators, TA, an algo trader and order book analyst, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Good to see you guys. Thank you, as always, for joining me on the call.
Always good to be here.
Thank you so much, Jen.
Of course. And thank you to all of our viewers as well. Keith, I might turn to you. You know, I know that you watch the rate cuts in the news and things a little bit more closely than we do. Than I do. You know, I can't speak for Mark, but this is a big part of your trading strategy and kind of creating the bigger picture. Maybe you wouldn't mind just giving us a slight recap of what you've really been paying the most attention to this last week, and maybe at the moment, you know, where your head's at, what your thoughts are.
Okay, well, I can tell you, number one, that I'm not an economist, and that
it's not financial advice.
It's not financial advice. And that the market, I'm not sure what the technical term is, but I think it doesn't have a fucking clue of what the Fed is going to do. The projections have literally been all over the place between a quarter point and a half a point rate cut, right? 25 basis points versus 50 basis points. And last month, I think it was like a month ago, it was like 75% had 25 basis points baked in. Obviously, that means 25% had 50 basis points baked in. And then it got even higher in the 25 basis point camp. And then, I don't know, last week it was like 66% in the 25 basis point camp. We headed into the weekend at literally a dead even 50-50. And then over the weekend, like every few hours, it would change. This morning, I woke up and it was at 33%. And then we had some economic data come out, and you know, like speculating on this at this point is it's pointless. So I checked a little while ago. It was at, and I'll share it with you. And I'm not even going to refresh my screen until I share it with you, so we can see if it changed since I checked it like an hour ago. But it has been changing throughout the day, and I won't be surprised if we're back to 50-50 or even closer to a lead on the 25 basis point side here before it's all said and done. We're now like almost 24 hours. I think we're like 26 hours, less than 26 hours away from the announcement tomorrow. And so let's see, this was 41% about an hour ago in the 25 basis point camp. And look at the drama. Now back to 39%, right? So who knows, and what does it matter? Right? That's the question. How much does it matter?
That's the question, right?
And you know, for a while I've been saying that, and this is really just based off what I've read and been hearing from some economists, that, you know, a larger cut might spook the market a bit, you know, raise concerns about what's happening on the backside. Raise concerns that, hey, the Fed is being more reactive than proactive, and they're concerned that they're too late and they're trying to catch up quick. And that would speak to maybe a spike in unemployment or, you know, hard landing, deep recession, all of the things that nobody wants to see. Except Mark, maybe, who's still looking for $12,000 Bitcoin. And I'd like to see it too, but not from here. And so that's one camp. Does a larger rate cut spook the market and kind of stoke the fear of a hard landing? And now that we see the sentiment leaning towards a 50 basis point cut, dominating, you know, the market here, according to the CME group, would those folks be upset or concerned if we only get 25 basis points? So where I was thinking that 25 basis points might be the better scenario, The market is looking for 50, and if they don't get it, now again, this
What's
could
going to happen?
a lot can happen between now and tomorrow. But if they don't get it, is the fact that this group is so heavily thinking 50 basis points, is this group going to be the one that dumps because they didn't, they didn't think it was enough. And so that remains to be seen. So I find it very, very difficult to speculate on that. And so I look at the fundamentals of Bitcoin, which are still very much intact, in my opinion. The trend.
Before we go, Keith, really quickly, before we move on from that, Mark, I know that you're muted, and I kind of asked Keith this question directly, but you know how this goes, right? You want to add anything to the rate cut and your thoughts on it, just jump in.
Yeah, a couple of things I want to add. And that's you can't separate so when Keith was talking about the Fed being either proactive or reactive, it's not necessarily true that either one of those things is like the absolute end of it. They, because it exists as a part of the system and because people are observing it, it's impossible for the Fed to do anything that doesn't cause the market to do something. And simultaneously, the Fed anticipating what the market is going to do is influencing its decision. So it's a constant sort of feedback. But looking back over how rate cuts have coincided with market capitulations and recessions, in general, the faster the Fed cuts rates, the more violent the oncoming recession. So generally, maybe the perspective that I want to offer on it is that when the rate cuts are steep, it's because the Fed is expecting a hard-ish kind of landing, and they're trying to soften the blow as much as possible. Now, whether it's because they cut rates very steeply that then signals to the market that they're expecting a super hard landing that causes the hard landing. Like, is this a self-fulfilling prophecy? No one really knows, because you can't, A/B test this stuff. But what I'm hoping for the market's sake is that we get not quite as steep a cut. Like, I would prefer to see the 25 basis point cut, and then maybe another 25 basis point cut happen later, because these kinds of slow wind downs after a long held interest rate after spiking it has generally gone very badly. If you wind it down slowly, that you generally get a more favorable outcome, across all market indicators than if you get a very steep drawdown in the interest rate. So we'll see. But yeah, if it is going to be the 50 basis point one, then I feel like that's the more that's the one that we shouldn't be praying for. I would hope for more cuts over longer periods of time than something pretty dramatic. Now, 50 basis points in an interest rate doesn't sound like that much, but yeah, compared to previous rate cuts, that is pretty high. So I would hope that it's not that, because that means that the Fed is not they're not panicking, but they're preparing for something bad. Whereas if it's a 25 basis point cut, that means that they're kind of confident that the economy can endure whatever is coming. But we'll see. I do think if we get the 50 basis point cut, that the market knows what that means and they'll act accordingly. Whereas if we get a 25 basis point cut, everyone will start to feel a little bit better, even if they're slightly disappointed that it's not the massive drop in interest rates that they were hoping to sort of see the market rally to a new all-time high before crashing. So hard to say what's going to happen next, but I'm hoping for the 25 basis point cut. We only have to wait a day longer to find out.
Yeah,
I agree with that completely, and that also opens the door for the discussion on what's going to happen the rest of the year. Right? Initially, it was telegraphed that likely be 100 basis points by the end of the year, and now we're hearing talk that, hey, maybe that's too aggressive. Maybe we just need to keep doing a series of quarter point cuts.
And that's very sober. A series of quarter point cuts is very, very healthy. I think that the market The market generally doesn't like anything to change abruptly. If you're going to make changes, make them slowly.
Meanwhile, Senator Elizabeth Warren comes out yesterday and says, I think it was yesterday, she's calling for a 75 basis point cut. That's just wrong at many levels for me. Number one, just stay in your lane. We don't need the Fed reactive to every politician, even though we know the politicians are out there to grandstand for their constituents and votes and, you know, whatever other media opportunities they can squeeze out of this. But, you know, number one, they need to stay in their lane, let the Fed remain independent, even though whatever happens, you know, they're going to say, at least one camp is going to say, oh, they're doing this just in time for the election. They're doing it because it's fucking time. That's the bottom line here. And so, you know, that's number one, stay in your lane. Number two, 75 basis point cut would really, I think, just put the market in a panic because of the reasons that Mark just said.
There is a counter argument, by the way, which is that because the Fed raised interest rates so quickly to counteract inflation after the 2020 money printing period, that, you know, with sharp increases in interest rates, and especially after they held them for so long, maybe a sharp change is warranted. Now, I don't share that opinion, and I think that, you know, history agrees with me, but I will acknowledge that because no one knows, there could be some validity to that argument as well. I just don't agree with it.
Well, I think that it's really difficult. What I was saying a few minutes ago, I think it's so difficult to speculate that it's kind of a futile exercise, at least for me at this stage. So I look at the things that I don't have to speculate on. I can look at the order book liquidity and see that, you know, the liquidity that was cleared out earlier in the week was exploited, right? And so that's how we got this run. And
what
now,
do you mean exploited?
I mean when we have illiquid zones, these dark zones in the order book, right? Mm-hmm. That those are easy to exploit, right? Illiquidity really opens the door to volatility.
Yeah.
Where liquidity dampens volatility, illiquidity amplifies volatility. And so at the moment, we just ripped up to 61K, and guess what? This hasn't replenished yet. And so if it doesn't replenish, guess where we're going? We'll round trip this mother. Right? Boom.
What price point is that bright spot at?
This one is at 59 and then 58. And then we get better 57, 56, and, you know, obviously down to 55 where it's anchored. And there's not a ton there, right? But it's insulated. Yeah. And so if we look at how this stacks up with the technicals, right? So we have bid support here from 55 up to 57, and then a little bit at 58, a little bit at 59. And then upwards, we're going up to 63. And then a little gap, and then we hit 64, and 65 is up here. And so if we look at how this aligns with technical resistance and support, we have technical support here at the red 50-week moving average, and that is just sub 55K, right? But we saw that we have some good bid liquidity anchoring this from 55K at least up to 56, and then more at 57, 58, 50, you know, little individual rungs, 57, 58, 59 that could hold it here. And then to the upside, we have liquidity exactly where technical resistance is on the chart around the number one, the top of this prior consolidation range where we just topped out a few minutes ago, and the 21-week moving average. Now, if I drill into dailies, I'll bet we're going to see some resistance. Look at this, right at the 100-day moving average. Perfect rejection right from the 100-day moving average. So this is somewhat predictable in that as we watch what happens tomorrow, we're going to watch to see how price behaves around these key levels. And, this may be zoomed a little tight here on the daily, depending on how you're trading. This was a great 4.5% candle here. And that does create volatility in both directions here. So I'm because the daily is a little bit tough. I'm at this stage, I'm focused more on the weeklies, because I think this is really where support is. You can see we had a test down here when we bottomed out at our local low, 49.5. We tested again here a couple weeks ago, and last week almost hit it, not quite. And so this 50-week moving average looks like technical support to me. We have secondary support here at this double bottom. And of course, the trend line is below that, currently hovering around 47K-ish from here. And so, and then, look what's happening down here. We have this golden cross between the 100 and the 200 week moving averages. This is the bullish indicator on the chart, along with, the technicals here with trend precognition giving us long signals as well. But the weekly moving average, I think, is more of a longer range, even a longer range indicator than what we're getting out of trend precognition here. So, we had this series of death crosses on the daily, and you look for something to resolve that, and double bottoms are something that often come into play here. So we've seen this. And so this might be it at this stage. And if not, then we have the trend line to look to as support. And this would be a last line of defense here.
So Keith, let me ask you a question.
Mm-hmm.
Do you think it's realistically, like, the chances of this round tripping, right? To the point that strategy wise, trading wise, right? You're obviously keeping an eye on everything, right? But are you setting, like, creating bids and things for, down to those levels right now? Or are you seeing that?
I would tell you that I missed an opportunity yesterday.
Yeah.
I'm operating a little slow these days. My wife's out of town on business. I'm running a solo effort here.
I bet you're killing it too.
Running a solo effort here at the house.
I'm just getting out of my car. Give me a second.
Oh, Mark's shopping for you, Jen. It's all good.
Good. I only have a couple of souvenir requests from where he's at currently.
Right, there you go. So you're asking if where I'm bidding. I'm bidding at the technicals. I'll bid that 50-day moving average. 50-week moving average. But I'm not interested in anything in between, because I'm already pretty well loaded at those levels. And so I'm just looking to pick up incremental bits that I can add to my stack and my longer term position. And I'm a little light on the low to mid 50s. I get plenty from the upper 50s.
Now, if it doesn't round trip this, right? Are you preparing? I just want to talk strategy for a minute. Are you preparing any asks or anything of the sort up in those upper levels? You said you have
in the upper,
upper 50s.
So this is what I'm watching. This is what I'm watching on the uppers, right? I think it's. Yeah. I still think because we haven't broken down, I'm still optimistic that there will be a break above. Now,
even with the lack of liquidity.
Well, this is something I'm watching that will help me make that determination, right?
Yeah.
But I'm trying not to overtrade this at this point, because I'm trading a lot less actually these days, and I'm really more about building my longer term position. Okay. And so I want opportunities when they present themselves, to be able to
You're not
take advantage
chasing
of
them
those.
now.
And I
Yeah.
do. I mean, listen, to be clear, I have bids laddered down, into these levels that we've been looking at for a long time, right? So I have
The
bids laddered.
40s,
Yeah,
low 40s. Yeah.
yeah. I don't know that they'll ever get filled, but if we go there, I don't want to miss that opportunity. But if if we don't break this yet, I'm okay.
Yeah.
And now I could see us hovering in this range between, where we are, between whether it's between these two moving averages. I think we probably would break above, maybe get past this and start working on this mid-cycle top, and then hopefully the 2021 top at some point in time. Maybe it takes till after the election. I don't know. But as long as we don't break down, then I'm okay. I'm patient enough to wait for that to happen. So if I see the breakdown, then I'm going to close some positions. I don't want to do that, but my cost basis, my average entry on everything I'm holding is still profitable. I'll be giving back some profits for sure if I do that, right? This is a longer term position. It's not a swing trade. So if I'm swing trading, then yeah, I'm taking this.
Right.
If I'm swing trading, I'm taking this now because of this very clear technical rejection.
Right.
But as a longer, working on a longer term position, I am trying to at least get to here before I shave anything off the top, right? If we ran into resistance up here, then I might trim a little of my position to be able to reinvest when we come back down.
Yeah.
But I'm patient. And if it takes until 2025 to get up here, I'm okay. But if
You realize it's only a couple more months, right?
Right. So if we
It's
start,
like barely even patient, that'll fly by, especially in crypto.
if we break down, if we start losing these levels, and specifically, if we lose this, then I may make some adjustments. I got to analyze that a little bit further, but this for sure, if we lose the trend line, then I'm gonna cut my losses. I won't actually technically be at a loss, but I'll be giving back a lot of freaking profit that always is annoying. But at the end of the day, it's protect your net worth, right? Protect.
Yeah.
And you will survive to trade another day, and look, the next opportunity is around the corner. And if we lose this, the next opportunity is going to be a really freaking good one.
You're right. Right.
Mark and I are going to go on a shopping spree.
Exactly. And that I think that perspective is an important one. We just heard Keith talk about patience. That these levels to the upside, they might not come as quickly as people on Twitter are telling us that they're going to come. And everyone's got their dream price target in mind. And some of those price targets are more sober than others. You might have heard Mike Saylor recently say that he's expecting Bitcoin to get to $13 million per token. Did you see this, Keith?
Yeah, I have a difficult time wrapping my head around that. Is it possible?
Me too.
It's sure it's possible.
Of course it's possible.
He is listen, he's so extreme that I can't almost take him seriously. I mean, listen, he's serious. He's got billions of dollars tied up in this, and he is minting, right? He's making bank out of these decisions. He's never been the guy who's trying to buy at the cheapest, because his mentality is, I'm buying this to never sell, and I'm going to leverage what I own in Bitcoin. I'm going to use that as collateral to leverage money to do other things. And that's fine. Hey, maybe he could bank with Trump with his new thing after that.
Maybe. But yeah, I think the point that I wanted to make is that
the targets he throws out, and when he says something like buy it and never sell, or sell your house and buy Bitcoin, this is irresponsible for the average retail trader, right? This isn't, everybody's not in a position to do that. And even if they are, most people aren't crazy enough to put all their eggs in one basket like that. So I don't think that that's necessarily great advice, but it gives a lot of hope. Same with, that Robert Kiyosaki, whatever his name is, the author, who's, telling us that Bitcoin's going to be $350,000 by the end of the year, and that he's taking on, hundreds of millions, if not billions, in debt to buy Bitcoin. Okay. If you're in a position to make that bet, then go ahead, but it's risky to advise other people to do that, I think.
Yeah.
Yeah, and there's a couple of things that are worth pointing out surrounding, like, let's say like a reasonable expectation for the Bitcoin market price in the short term. So, for example, one of the data points I saw recently, and this was, again, I think it was just on a Twitter thread, so I haven't actually investigated this any farther, but anecdotally, a couple of people have told me that it sounds about right, and that's that the average cost to mine a single Bitcoin right now is about $80,000, which is pretty high. Yeah. And this means that currently miners are making a loss on the Bitcoins that they're mining. Now, Bitcoin has entered that type of environment a few times before, and in general, the market price has caught up to the mining price and then surpassed it. Right. This is a part of the thesis that as these things become scarce, that their value goes up. For miners, at least the cost goes up, and they kind of count on the value coming with it. Now, you could conclude from an anecdote like that the fair market valuation for a single Bitcoin is somewhere around the $80,000 mark, in which case buying Bitcoin at this price is worth it, right? This is Bitcoin trading at a discount compared to what it would cost to mine it. And think about that for a second. You can currently buy a Bitcoin cheaper than what you can mine it for. It's a big deal. So that we could look back on this moment and say, wow, that was such an obvious market indicator that, Bitcoin trading at this level was a very obvious buy.
But
alternatively,
go ahead.
Yeah, alternatively, we could also look back at this moment and say, wow, this was an indicator that a lot of miners are going to have to shut down operations, right? And the hash rate of the network could drop dramatically, or that the Bitcoins that they have mined up until this point, if they've been stashing some of them, they're now going to have to start selling in order to cover essentially the production costs of maintaining the Bitcoin blockchain and the competition that they have with each other. And so there could be a sell-off coming. Because remember, there's two ways that the mining cost and the actual trading cost of Bitcoin can equilibrate. One is that the market itself will begin to trade at parity with the cost of mining, either because the demand is going up, or because the sell pressure is coming down. These are kind of the same thing. But it's also true that miners give up. And the competition to mine Bitcoin comes down because there are fewer miners. And so the average, your average success rate in mining goes up. And we basically we're at a position now where we need one of those things to be true. And there's no way to know which one is going to happen. If there are people who are setting up miners now who are dramatically underwater, then, I would anticipate the hash rate of the network to come down and then the remaining miners to become a little bit more successful. But if people aren't switching off their machines, it suggests that they've got some Bitcoin in the bank and they're going to have to start selling it to cover essentially the production costs, and that would cause negative price pressure. So we'll see. It's an interesting data point. And again, I haven't verified it, but I'm really interested to see how it plays out.
And selling is kind of counterproductive to what they want to do, right?
Exactly. They don't want to sell.
So selling is really just survival for them.
Yeah.
Right. If they sell, and if they can wait it out, they're much better off if they can ride this out and potentially drive price up. Right. So if some miners have to shut down, those that remain will in essence become more profitable.
Correct.
So that's the squeeze that that the top dogs want to see happen right now, right?
Yeah. And that's a good way to say it. It's a mining squeeze. It's a production squeeze. We're going to wait and see who has the resources to continue mining without being forced to sell their Bitcoins to cover overheads. And it's going to be interesting because, Bitcoin doesn't really have that many miners. There are there are lots of hobbyists and things like that, but really it comes down to 3 mining pools. And the hash rate of the network is going through the roof recently. People have really been adding ASICs, I suppose, to their inventory to mine this stuff more aggressively. Which has an escalating cost of power to run these things. So I honestly don't know how it's going to play out, but I hope that the hash rate of the network doesn't take a hit. I would like to see all of those miners continue, and for the market rate to catch up to what it costs to run them. But it'll be one of those things that I'm interested to look back in a year and convince myself what was the obvious answer. But from where I'm standing, I honestly have no idea what's going to happen. I hope that those miners can keep their head above water long enough for the market to agree with the production cost. But it's an unstable position to be in. You don't want to be hoping for stuff. You want stuff to be relatively certain. This is a very uncertain position.
Yeah, and this is a bit of a left turn from where the conversation's been, but this is, we everybody in the crypto community looks at blockchain as an innovation, largely around obviously fintech and supply chains, lots of different applications for how to use blockchain, but an innovation that can really that the whole world can benefit from, in addition to perhaps a new financial system, would be developing more efficient power, right? And so maybe when this is all said and done, because we do hear the concerns about the energy consumption on mining, right? And look at what El Salvador has done, right? They're using a volcano. There's an endless supply of energy that's not taxing the country. So that might be interesting, right? Maybe we get some new alternative sources of energy out of this, or more efficient sources of energy, or more sustainable sources of energy when it's all said and done. XBT chiming in with significant cost agnostic miners these days, which we've never seen before.
That's super interesting. I honestly didn't expect I didn't expect we would ever have a cost agnostic miner. I'm not even sure what it necessarily means, unless these are people that can mine for free because they're getting power from another source or something.
So that would be and XBT, please chime in here. Are you speaking to something like in akin to what they're doing in El Salvador, or are you talking about using sustainable energy to mine, which I know is something that
you wouldn't be able to detect which. You would just know that there are miners that have been contributing to the hash rate of the network that haven't been paid commensurate with how much it would cost to perform as many hashes that they have, but you wouldn't actually know where they're how they're powering their miners.
Right. I'm just asking XBT if that's what he's alluding to, and so we'll just wait patiently to see if he sends us another message. It means people who are only interested in securing their ability to transact.
Yeah, that's interesting.
Okay. All right. Well,
First I've heard of that.
Okay. So, okay. That's interesting.
Yeah.
That's a whole nother show.
I was just thinking.
I also met there's a company that's they describe themselves as hobbyists, or Bitcoin technology for hobbyists. And they sell mining equipment, but it's very very low power. You're never gonna win a single block sort of mining equipment.
Right.
but where people like want to feel like they're a part of the security of Bitcoin. Like the more people that are doing these things, like if they sell, let's say, 1,000,000 units, those 1,000,000 units are still making a significant enough impact on, the Bitcoin network that maybe one of those, units wins a block every year or something like that. And that's enough. But if one of these miners has to switch off their mining pool, that there's still like this fallback decentralized hash rate that would continue to secure it. And yeah, people are doing that more and more, where they're mining Bitcoins, but not because they're ever expecting to get a Bitcoin out of it, but just because they're interested in keeping the network secure.
Interesting. That's really interesting. Now that you mention it, I saw something posted a couple of weeks ago where they're making those mining rigs, basically where retail can buy them off a shelf, and one actually mined a Bitcoin. Who shared that? Former the guy who founded Twitter, Jack
Dorsey.
Jack Dorsey posted something a couple weeks ago. I don't know if he's involved in that or not, but that was interesting to me. Well, I've zoomed out here to a 3-year chart of Bitcoin, and I've pushed the contrast here a little bit to make it easier to see. And this is really, if we zoom way out, here's the guardrails of the range. It's, we're 50K up to 63K. And with some mid-range support here, pretty much right in the middle at 55, right? I mean, look at this. This is textbook. So
yeah,
you just have to wonder if, a rate cut announcement tomorrow breaks us out of this, or if we hang in this range for even longer until we get through the election. And the only thing that will clue us in, because we could speculate till we're blue in the face, is just watching to see where liquidity moves along the way, and if it starts.
What's the total asking depth at the moment?
What's the depth on asks? You mean like just for this range, or all the way up?
Yeah, up to what's that number? 80K.
Okay, well, let's see. From where we're at now, Mark, I'm gonna let you do the math real quick in your head. There's 47 million plus another 45. We'll call that 92-ish.
19. Yeah.
And then another 20.
110.
Another 31.
140.
Another 17, 18.
160-ish. Yeah.
Another 15.
Where are we right now?
At 66. 115. So that's 130 million.
Yeah.
Another 20. 150 million. Another 24. 175 million. We're using round numbers. And then 54 stacked at 70 at that 70K level.
Was that 180?
We went from 175 plus another
175. Okay.
So that's what,
230.
Okay. And then another, we'll call it 30.
30.
Plus another 36.
So
260 to 96. Another 31. I mean, you're upwards of 300 million up to 80K.
Yeah. So we got about $1/3 billion between 60K and 80K.
Yeah, and this is one exchange, mind you, right? And so
more than that.
So what I'm looking at more is what's our near range, right? Just in terms of the battle right now is essentially a tug of war, right? Or ping pong, perhaps. and these are the boundaries. And so you can see that last week we had this bright spot down here, and that's helped push us up. And now the upside is gaining some strength again, and the downside is slightly weaker. Not a lot, but slightly weaker. And so if price can hold here, right? I expect price to hold here for sure. And if it doesn't, that may speak to the end. Because once we start moving up here, if we get to 70K or we clear 69, where we have that, all that history, we clear that, then I won't be surprised if we start seeing some of these asks here start drifting higher. Right.
Mhm.
So this is likely to start dynamically shifting a bit. For the past several months, we've seen it dropping lower. Right. But once price gets up here, if price can make it up here, then, why wouldn't these guys raise their asks unless, of course, they're trying to protect shorts?
Yeah.
Which certainly happens, right? That's a lot of what's going on. And so at the moment, our immediate hurdles, we got at this, we just touched 61 and change, right? But we're basically dealing with 48, another 46, 90 some odd million, another 20. I mean, we got a good 150 million just to get to this mid-cycle top or so. And then down below, what's here? 40, another 40, 80, another 7, another 25. So it's a slight advantage to the upside in terms of resistance. So resistance is a bit stronger than support is. But I expect to see the dynamics of this whole thing change here over the next 24 hours, at least a bit, to, in a reaction to the Fed cut.
Yeah.
So maybe, like I said, is a round trip possible? Yes. You see that the market is still trying to grind through some of this, right? We had a bit of a pullback off of the peak here, but doesn't mean it's over. And it might be, but not necessarily, right? They started buying again. So what I want to see is some bids stack in above 60K. There's very, very little there right now. And this would be, this is a free fall, right? If there's one market sell, and not a very big one, it takes nothing to get back down here and round trip this.
This is when you set your orders at that.
What's that?
Right? Set your orders there. If it's a free fall, right? If all it takes is one.
Right, but it's you have to be you have to be careful that you're not catching a falling knife that's gonna
Exactly.
dagger that's gonna go through you. So
you're thinking that not only is it going to go down to there, but it's going to keep going.
Well, it could conceivably. This is why I watch the CVD, right? If it falls, fine, let it fall, but I'm going to wait for buying to resume before I buy.
Okay.
And so where I will put a bid, or where I told you I had a bid, which is deeper in the trajectory, is here on the technicals, right? So I'll pick one up here. I'm happy to pick one up here, and if I'm wrong, if it's going down further, then I'll have a stop on it and it'll close. But I'm optimistic that this level is going to hold.
The MACD on the bottom of that chart, has the blue line just crossed negative?
On which time frame?
On the check the weekly for me.
Okay, on the weekly, it hasn't crossed yet, but we can see that.
How close is it?
Let's see if I can.
Is it like touching it?
No,
not
okay.
yet.
It's
slightly above still.
Yeah, it's not there yet, but you can see that the bearish momentum is fading a bit. Right?
It has, yeah.
So it's almost, the blue line is almost horizontal at this point.
Yeah.
So it is. I take that back. It is exactly.
It's actually curving. Yeah.
So it's
okay. Well, that's a nice pause in the momentum. So remember, I've been referring to the MACD for months now. What does it look like on the monthly? Yeah. Okay. In the monthly, it's actually curving back. Okay. We'll see. But yeah. But this is honestly my favorite indicator. It is slow. Like it generally is a lagging indicator. It's not general. It is a lagging indicator. But yeah, this is the thing that I pay attention to more than anything else.
Well, I pay attention to that, but I also pay close attention to, as you guys know, the RSI, and
Yeah, yeah.
especially on the weekly. And for me, this one is still very much intact. As you can see, we approached it. Look, every time we've approached this level, here's my line in the sand, for
Yeah.
the trend to remain intact, and it's still squarely intact and bounced nicely here. Perfect double bottom on this as well here. And so
That looks pretty good, actually.
yeah. So this is my real invalidation on the market. And that if we cross below this on the weekly and get a close below this on the weekly, then chances are we're done, unless there's just a super quick recovery. But you can see the times that we've hovered around that. It's not typically good, right? Anytime that price is above that line, and that goes all the way through history on Bitcoin, the uptrend remains intact, and anytime it's below that line, the downtrend is intact. So things to consider.
So Mark, what are your thoughts if you were to create a strategy or want to trade this right now on chain? Right? Keith's talking about laddering down. Keith, are you setting anything to sell if it goes up? What did we say?
I said, I'm building a longer term position. So yeah. I would sell if I see resistance strengthening and a rejection from resistance. So let's say we break above this 21-week moving average, which is currently at around just shy of 63K, and then we take out the mid-cycle top here at 65K. If we break back down below, so if we lose the level, in other words, it ends up being a fake out, then I will likely trim some of my position that was accumulated up here in the upper 50s for a chance to buy back in lower, because I think that we've had so many rejections from these levels, right? Eventually we got to get there, but there's the technicals matter, right? And we broke through this. I thought that last week when we came up here, we took out the 21 day, we went and we got the 50 day, and then we lost them. We lost them after the weekend. It was short lived. And so I don't think we even made it through the entire weekend, right? Sunday it broke down. So that was my clue that we were coming back here. And I'm glad that we bounced from where we did. I picked up a little, and when we lost it again, I think I sold. I bought and sold one quick, and then because I didn't think it was going to pan out. Of course, if I had held it, I'd be doing better than I did with it. But again, the idea is to preserve your capital and try not to lose money as frequently as you can. So
it's like you said too. I'm asking you how you're playing this. You were talking about patience earlier, right? So you might not be doing anything right now. More so just, curiosity and maybe insight for some, or something to consider for our viewers,
Yeah, I mean, if you're trading, there's opportunities, right? This volatility brings opportunities for sure. But I would say if you're shorting, you better have tight stops. And be prepared and be prepared for squeeze, because here's the evidence right here. Everybody who said, "Oh, we're cutting, price is going to dump," well, here you go. So we'll see what happens tomorrow. I do think this is, especially because there's so much mixed sentiment on what the actual cut's going to be. I do think that this is to some degree going to be a buy the rumor, sell the news event. The question is, how much of a sell-off do we see? Is it just a little pullback, or do we go deeper? And if there's bids up here to support it, then we're not going to go very far.
So Jen, to answer your question, like I wouldn't, and I know I say this all the time, but I'm not buying here, but I'm especially not buying here. If you have a look at the liquidity that Keith was referring to before, and what he referred to as the free fall. Imagine, if I if I offered to sell you something, let's say a gold coin, for $1,000, and you looked at how much I'm buying those gold coins for in the shop that I'm selling them to you at, and so I'm telling you, you can buy it from me for $1,000, but if you offer it to sell it back to me, I'm only going to give you $900, right? You might feel better if I was offering you $999. It's like, yeah, if I change my mind, I can sell it back to you and only make $1 loss. This is the position we're in right now, where all of the bidding liquidity beneath us is basically exhausted. So you can buy Bitcoin now at a premium, but if you change your mind,
I'm not saying
it's
now.
a long way. No, I know, I get it, but I just mean that it's a long way down.
Right, bids if there is that sort of free fall. That's what I'm saying.
Okay, so So let's put yourself in that position. If you were a rival gold coin dealer, how would you compete in this market? Because you could offer gold coins at maybe a slightly higher price, but then offer them a slightly higher buyback price, right? So say, look, this gold coin is going to cost you $1,005, but you can sell it back to me for like $990. Whereas this other guy, sure, he's selling you a cheaper gold coin, but if you sell it back to him, it's a much sharper loss. So one of the things you can do here is you can start asking, you can put your ask prices slightly higher. So if the market rallies into you, your Bitcoin can be bought. And then you can put your bid prices slightly higher, so that if it pulls back, you'll be the first to traverse that distance and cover the spread. So yeah, if I was doing this, I'd be having my asking price is pretty close to the current asking price, because I don't think that we're expecting like a massive rally to the upside. And again, don't bet the bank on anything that I ever say. And I never, I know I talk about trading every week, but I actually don't trade with an enormous amount of my portfolio. But yeah, looking at the market, the way that it currently is, I wouldn't want to be the person who's buying at this price when I think that I could buy a lot lower, right? The round trip that Keith is referring to. And remember, Bitcoin is one of the only charts in the world that prints this thing called a Bart-Simpson pattern. And it's generally because the bidding liquidity behind it doesn't get replenished fast enough as the bids are taken. And so we could round trip it. We could round trip it very quickly. And I would prefer to be the person that's buying at the bottom of the round trip. Well, I'm saying, yeah, like,
are you going to wait for that, or are you going to set some orders in advance in case it does happen for that? Like,
that's what I'm saying. Yeah, what I'm saying is, like, it's always better to make. Like, I think spot trading is dumb. I don't like posting orders with uncertain results. I prefer to have certainty on execution. And so, yeah, I would be going to the book and, putting in a bid at about 5% below where we currently are. If I was desperate to buy a Bitcoin, I wouldn't buy it at the current asking price.
I just realized we're at the top of the hour, but Keith, really quickly, just because Mark had made that comment about spot trading, do you spot trade generally, or do you stay away from it as well?
I spot trade, and I don't trade leverage. So I actually finally have some futures instruments that I can trade domestically, but I haven't gone there yet. But my question to Mark is, all this talk about, I know the gold coin was an analogy, but I know that you would really probably, if you're investing that cash, go for World Liberty Financial Coin.
Yeah,
so you get
a fork of
history and be part of what is potentially the greatest Ponzi of all time.
Yeah, you can double up on Mike Saylor and say that everyone should sell all of their Bitcoin to buy World Liberty DeFi or whatever it's being called. I think this will be the first time a president of the United States has actively started their own project. So how can you possibly stay away from this? For anyone that's immune to irony, I'm being sarcastic. Please don't buy Trump's DeFi coin.
I tried to listen to his spaces last night.
Oh yeah, what did he say?
Well, he's fresh off the heels of a second assassination attempt.
I mean, that's not funny, but it's amazing that he went from assassination attempts to crypto Twitter spaces.
Right. Well, just crazy set of circumstances. But it was evident that
he supports crypto, is what he was saying. I was listening to it as well.
His sons are really the ones spearheading this. It's clear that he doesn't really have a firm grasp of what this industry is and what it does.
Yeah.
All he knows is that, he sold NFTs and he made money, and he was surprised that he made money on, how quick the NFTs went. And he knows that his own family is suddenly having trouble getting banked. And so this is something that they seem to be working on, because they know it's a problem, because they're having the problem. And they, basically the analogy was, gosh, if we're having this kind of problem, imagine how average people, most people who don't have billions of dollars and haven't built real estate empires and changed the skyline of New York, or been president of the United States, imagine how the rest of the world, the unbanked and the underbanked, are doing. So the angle is, gosh, we're being treated unfairly and you're getting treated unfairly, and we're going to have an opportunity for you guys to borrow money.
Right.
Is essentially what they're doing. But I mean, I can't imagine a project with more red flags. I really can't. But
yeah, it's really bizarre. And
I haven't done enough. I haven't done, to be fair, I haven't done enough research. You do your own. I'm taking it at face value for what it is.
He's doing it under a regulatory exemption. So the only people that are allowed to participate are like KYC'd, like accredited investors and things. So like, even from like a DeFi perspective, and I'm not saying that this is good or bad. I'm just saying, like, it's not really DeFi. Like it uses a blockchain.
DeFi is really DeFi anymore, Mark?
It's not.
No, I mean, that's an interesting point as well.
On-chain isn't really on-chain. DeFi isn't really decentralized. So we can't pinpoint one project.
You said anymore.
They don't fall into that category.
You said it.
No, I will.
Well, I will say, like Bancor is very much decentralized. Mark, you could speak to that better than I can, but I will say that as the industry goes in different directions, now all of a sudden it's off-chain transactions. There's a lot of off-chain components, whereas before it was very much on-chain. Then there was this sort of compromise where it wasn't, okay, it all needs to be decentralized because this is the ethos. This is what this is. Then it was like, okay, well, in order to achieve this, we're going to have some centralized components, but we're willing to make that trade-off. So at one point, there were many, many projects that were decentralized, and there still are, right? But as we start making these sorts of compromises and these sorts of trade-offs, we are seeing more of the off-chain components and more of the centralized components.
And that's fair and accurate. I think, I've always, since we first started doing this, if you go back to shows 1 through 5, my concerns about DeFi were that I wasn't seeing enough D in DeFi. And however the industry is evolving, we know that's going to happen. But when you look at this setup with this Trump project, there does not appear to be a concentrated effort to decentralize it as much as they can. In fact, it seems extremely centralized.
Yeah, see, I don't know enough about the project to speak on it.
That centralization is consolidated into a very, very small group. With a pretty interesting history.
Mark, let me ask you this. I know we don't speak about regulation very much, but since we're speaking about this and this is, kind of relevant to it, is it more difficult if you're KYC'd and you are a centralized entity in the industry? is it easier to have some sort of like, is the regulation clearer in that aspect than it is for decentralized projects? Because I tend to think that it's a little bit clearer that decentralization is somewhat of the issue, right? Or that gray area.
Yeah, it's the more centralized something is, the more regulatory compliant it is.
Yeah. Okay.
I mean,
Well, we
it
can have a whole
depends on.
show on this, I think, you know?
Yeah, so I mean, it's not enough to be centralized that you're now compliant, because you can be,
Of
you
course.
know, you can be centralized and completely uncompliant. But the advantage that you have being centralized is that acquiring the licenses and doing the reporting, and setting up the legal entities and everything else is like very well defined. And yeah, and it comes with things like KYC, AML, and ATF laws that need to be abided by, which is fine. It's just and I'm not arguing against these things. I think a slightly more regulated space is actually going to be advantageous. And I know that
listened to it yesterday too. That's what he was saying, is that I think people want regulation. It just needs to be clear regulation. There really isn't anything. People get the best advice they can, but they don't know either, you know?
Yeah, sure. Yeah.
Well, like I said when we first started this, we don't talk regulation much, and we try not to. So we will quit while we're ahead. Keith, I see you kind of playing with your chart. Anything that you want to bring to our attention first before we call it a day?
Well, I'm just looking at some things with the eye of a trader that, I'm looking at the 1 hour chart here. I have a pretty strong trend precognition signal that says that at least over the next 50 minutes and 30 seconds, price isn't going to go higher than we were at 61.2 ish, 61.3, 61.2, something in that range. It's not likely to. This is, of course, a tentative signal, so a push back up to that level would invalidate it. But if I were trading this, because we had that rejection from the 100-day moving average, I mean, picture perfect, and we have
this indicator now.
We have an indicator on the on a 1 hour chart. This is a low. If I was scalping this or swinging it, I would probably close.
Yeah, I agree.
We got one more comment from XBT4D. By the way, thank you. We always enjoy having you on here and hearing what you have to say. So I love when I see your comments pop up. MSTR dumping while BTC pumping is very unusual. Have you guys noticed this at all?
I haven't noticed.
No, because MSTR is MicroStrategy, which is, of course, Michael Saylor's company, which has pumped so largely because they hold so much Bitcoin on their balance sheet. And so when price goes up, I believe they go up. I have not done a comparison on those two, though, right? I have not compared MicroStrategy. Let's see what that looks like. Let's look at it on a scale and see. Now let me clear out some noise.
It's like the typical trader. It's just lines and indicators and colors.
I got way too much going on here.
There's art there.
There is art. Let me clear out some of the noise of the art and see if we can make sense of what's happening here. I'll even take out the moving averages just for clarity's sake. And so
that's the Bitcoin USD, right? US dollar.
Right. So MicroStrategy down after Friday. Okay. So we had the weekend. That doesn't count for that. Well, the weekend doesn't count because they don't trade. But at the moment, we're seeing a pullback, obviously, on MicroStrategy. What's their day? What's the daily? where were they yesterday? They're up at 134 down to 129. And so, yeah, maybe this is in anticipation of tomorrow's rate cut. Who knows? You know, those are retail traders who hold that and maybe anticipating tomorrow's rate cut decision and the impact it might have on the market. Let's see if we got a change over here. And I'm going to take one more look, a little change.
It's interesting. When we first joined or started the call, it was 59.41.
Right. And it's been like this since, you know, for days. I want to real quickly look at the broader market, I guess, and see what the indexes are doing next to Bitcoin here today. Got to zoom this one out a little bit and get it the right size. Okay, so look, S&P is down, the Dow Jones is down, NASDAQ is up a little bit. This doesn't resolve until later, I don't think. And so, and Bitcoin's up today. So, are we seeing a decoupling happen at this point?
Could be.
Don't
Too
know.
early to tell.
Yeah. Too early to tell, but look at the last few days.
Yeah.
Interesting.
Yeah.
Oh, so much more to look at today. We'll have to, you know.
Thank you guys so much for being up here with me. I always enjoy our Tuesday calls. XBT40, thank you so much for joining us also and for sharing your comments and your thoughts with us. We always encourage everybody to do the same. So we'll keep an eye on the news tomorrow and all of the upcoming news. And Keith, always look forward to your videos and things. I know you're probably going to wind up doing a live call tomorrow as well. Once the news does hit, see what's going on with the order book and things of the sort. So we'll definitely keep an eye out for that.
Well, as luck would have it, tomorrow I will be picking up my kid from somewhere right when I want to be in front of my computer, but that's okay. My priorities are well aligned. But I will be.
Does that count as Keith traveling? Because I've got a special indicator set up specifically for that.
No, this is local transport. I'm not going
okay,
to
good. Okay.
college. I'm going to pick up my
I'm not
kid.
panicking then.
Well, I'm sure we'll see it. If it's not right when the news comes out, I'm sure we'll see it, right? I always recommend everybody keeping an eye on Keith and the material.
It's funny you say that, Mark, because it's like, you know, I joke about when I go on trips that the market always moves on me when I'm traveling, but it happens a lot too when I, you know, am out and about.
Didn't your community members tell you to let them know the next time you were going to be traveling? I think this is where this originated.
I join my private group. I've hacked Keith's Google Calendar, and I know all of his travel dates.
If I get it right, if you put an air tag on my car, and you can tell when I leave, you'll know.
Exactly.
We know how to play the market.
Right. Exactly.
Well, Mark, I know you're traveling. Be safe. Keith, enjoy your afternoon tomorrow. I know it's nice. You always enjoy your family time. And like I said, if not tomorrow, right when the news comes out, you know, I'm sure we'll see something from you following the news and what's going on with, you know, fire charts and the liquidity and the order book and stuff. So definitely recommend everyone keep an eye on that.
I will. I'll probably do something in the morning prior to just to give everybody a snapshot of what the order book looks like as we head into it. And, you know, that for me, again, is where I'm going to gauge what the volatility is going to be like tomorrow, right?
Yeah.
And look, just in the last few minutes, we see, you just saw this change right before your eyes, right? We had some support. Now we got resistance, and they're trying to push price down a little bit. We'll see. The buying, the selling actually has leveled off a bit from whales, and they're actually starting to buy a little bit here into this liquidity. So I think we could still hover in this range for a little while. We'll see. I mean, what I want to see tomorrow morning is more bid liquidity up here above 59, preferably above 60 to have a shot at moving here. If not, then this very easily gets absorbed. It's very thin right here.
That bright orange band, the first one to the downside, what price is that on?
This one?
Yeah, 57.
Yeah.
I put Keith's the Material Indicators Twitter X account MI_algos. You know, I talk about waiting and then keeping an eye out for his videos and things and his analysis. But for anybody who doesn't know his X and his Twitter account, it's there.
Thanks, I appreciate that. And
yeah, for sure.
Yeah, guys,
awesome.
Check it out.
We'll talk to you guys. Oh, go ahead, Keith. Sorry.
I was just going to say, I do the lives pretty much daily. And Monday through Friday, and so you can catch those. I stream them live to the X channels, but also on my personal YouTube channel at KA Pro Trading. So you can find me. I'm easy to find. Unlike the majority of crypto X or crypto Twitter or whatever we want to call it these days, I'm pretty transparent about who I am and what I do. Very transparent about who I am and what I do. Not, I don't have anonymous channels and secret aliases. What you see is what you get.
We won't find you deleting your last week's tweet. Is that what you mean?
I own my mistakes.
Awesome. Well, you guys are fantastic.
What a concept.
Thank you again. Definitely keep an eye out for that, and we will connect, next Tuesday for sure.
All right. Thanks, guys. Have a great rest of the week. Good luck, everybody.
Thank you, Keith. Thank you, John.
Stay safe.
You too.
I will. Thank you.
Thank you to all of the viewers. We'll see you next week.
Ciao.